Hi, everyone, and welcome to this week's episode of Money Moves. I will go over my Lending Club account. I will also cover my Worthy Bonds positions. I will go over my Fundrise account. Of course, I will go over my M1 Retire portfolio and my M1 Higher Yield Savings account. I'll quickly go over my thoughts of current market conditions. Then I will go over my week-to-week progress. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like living in this beautiful 5-bed, 6-bath mansion in Houston, Texas, or if you're just getting started on your financial journey, definitely like and subscribe. It has an awesome entryway with a wine room, a regal office to get work done, and an open concept kitchen. It's pretty nice, even if it looks like they splashed milk on everything. Finally, a little bit of color in the 2-story living room, the true luxury of a sitting space in your master bedroom, and a bathroom that you could play baseball in. Sweet theater room, cool game room, too bad about the Aggies though. Last but not least, a cool pool with a slide. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. All right, first up is Lending Club. This portfolio continues to outperform. It's doing exceptionally well at above 9%. I did make a deposit into Lending Club last week, and this week that money cleared, so I've been slowly investing it. And you can see here I still have about $187 of cash available. I'm just waiting for a couple of good loans to present themselves, and I will invest that as soon as I see them. My IRA is still ridiculous at 26%, and I'm waiting to see if it comes down. Again, I'm sure that it will. It just takes time. I continue to get closer and closer on my investment strategy as my D-note loans make up a smaller and smaller percentage of my overall portfolio. My IRA is pretty close to its B-note allocation, but A and C notes still need a little bit of work. I found a nice C-note loan just now. I like that this is a home improvement loan. Makes me think that they're good on most of their debts and they're choosing to invest in their property. This is also a C-note loan with a fairly low credit score at 685 to 689, but it's only $25,000, which is good, and it also has a verified income of $11,250. Says they're a pharmacist, so that makes sense, and that they have a mortgage with an employment length of 7 years. All of this looks pretty good except for their revolving credit balance. That's pretty high at $70,000, but again, they have a very high income, which keeps their debt to income ratio pretty low. They also had a delinquency almost 2 years ago, but no public records on file. So I'm going to go ahead and invest in this note. When you go to invest in it, this is what it looks like. You can see the average rate, how much money you're investing, how much they expect to be charged off the loan, as well as the management fees that you will pay. They expect a rate of return of just over 4%, but as you saw on my main page, I have been outperforming pretty well. And we're done. Next up is Worthy Bonds. This is a part of my emergency savings portfolio because these are fully liquid and I can sell out of them at any time that I need extra cash. They also grow at 5%, so they far exceed any checking or savings accounts available. You can see here each week I make about $10.40, and this continues to tick upwards. On the daily, I make a little bit over $1.48, and that also continues to tick up because these compound daily. On my smaller account, you can see here I deposited some money last week. And on the daily reports, on January 23rd, someone used the code in the description to get a free bond. So thanks for supporting the channel and congratulations on a free bond. Overall, Worthy continues to be a very solid 5% and a solid higher interest alternative to high yield savings accounts. Next up is Fundrise. This is my long-term illiquid real estate holding account. I had my regular monthly deposit clear this week, which is $350 per month. I also had a couple of one-time deposits this month just to keep it on track. My goal is to get this account to $750,000 by 2040. And based on historical returns, I am on track. You can see here my projected value right now is $654,000, but I deposit each month and that will continue to increase over time. Here you can see my monthly investment, and this week I also invested $400. As you can see here on my overall investment view, I'm only 17% in real estate, and I'm trying to get that up to somewhere around 20 to 25%. And that's why I've been so aggressive with Fundrise. Just to give you an idea of the aggressiveness of this account, in May of last year, I was only at $3,000. And since then, I've really been consistently depositing money. Right here, you can see I had a pretty big deposit, and that's because I actually purchased stock in the company. They had an internal share offering that I participated in. Then I continued to contribute regularly to my overall account, and it has been going up ever since. Since May of this year, I have been contributing more and more aggressively, and you can see it's been over $1,500 in the last 2 months. Once second quarter finishes and I receive my quarterly dividend, as well as the Fundrise quarterly update, I will share all of those updates with you just so you have a good idea of what returns you can expect in the midst of a pandemic. Moving on to my Retire account, you can see here we're down a little bit over the last week, and overall we are down a little over 5%. Last week this account was basically flat, which means I made up almost all of my losses during the bear market rally. And the only reason I'm not down more is because of my short-term government bond position. You can see here this account is currently sitting at just over 11% in short-term government bonds. And you can see here they've gone up a little bit since I invested in them. And that's because people think the market is generally more risky and they want to take their money out of the markets in order to preserve its value. I'm still not totally a doom and gloom kind of guy on the stock market. I do think we are going to see a little bit of a second dip here, but I'm continuing to invest. You can see on the 25th, I deposited $250 and I also reinvested all of the dividends I received up until that point. And you can see here, I'm continuing to receive dividends. So as long as I continue to see dividends coming in and I'm not overly concerned about market conditions, I will continue to invest. Moving on to my higher yield savings account, you can see it's still up over 6%, and that's because most of this account is currently in bonds. I did have quite a bit of it in equities, but as we near the top around June 8th, I did move some of that money over to more bonds, and that's because I thought the bear market rally was going to be finishing up right around there, and that seems to be the top, at least for now. Just to expand on the market timing of my extremely lucky trade, you can see here the morning of the 8th is when I got out right at 320 for SPY. It did continue to go up a little bit in midday trading up to 323, and then it proceeded to come back down. The next day, it was pretty much flat, and then into the 11th, it collapsed pretty heavily down to about $300. Then it dipped all the way down to 297 and then came all the way back up to right around 315, and now we're back down to $300. And just generally looking at this chart overall from the lows here in March all the way up to the highs on June 8th and 9th, I think anybody looking at this chart would understand that the next direction for the market is probably down. And I'm going to continue to sit in cash a little bit. I will continue to trickle money into the markets, but I'm going to be a little bit more hesitant for now until we see some cheaper prices. And you can see here that Forbes on June 26th declared the bear market rally dead. They say here that the stock market can always rebound and move higher, but it appears that spiking Rona cases and a high valuation may trigger some to take some profits. Despite that, I still added $100 to this overall portfolio. And you can see here some of that money went into bonds like this mortgage-backed securities ETF, but some of that did go into the markets. As I said before, I will continue to trickle money into equities. Going over my week-to-week progress, you can see my total invested money went up about $1,500, and that's really despite my stock position staying about flat. I did put money into my stock position this week. However, because the markets went down, the value of those stocks stayed just about the same. My bond position also went down a little bit. My REITs stayed just about flat. That's because I own some public REITs, so they do go down with the markets. Lending Club went up about $45. And then my cash also went up a little bit, and I think I'm going to stay right around this range, maybe let it go up a little bit longer. Depends on how the markets react over the next month. And here's a visual representation of that. You can see my cash went down a little bit and most of my other investments stayed just about flat. Let me know down in the comments section what you think of the current market conditions. Should we continue to buy stock regularly? Should we buy bonds? What are you buying? If you got any value out of this video, definitely like and subscribe. Of course, this is not financial advice. This is for entertainment purposes only, and this is only what I'm doing with my own money. Please consult your financial advisor before making any decisions with your money. And with that, let's get to the jelly. Today's jelly is called Crushed Ice, and this is an event put on by Red Bull, and this one is from 2019 in Fenway Park. Crushed Ice is basically a mix between hockey and racing. They are allowed to hit each other, knock each other down, but the point is to get down the track as quickly as possible. There's also lots of drops and rolling hills that they make look pretty easy, but I assure you it is terrifying. So here's what that looks like.
The explosive start by Cam Nas. He saved it all for this one. Scott Croxall squeaks in there, right? Cam avoiding that big gash in the deck of Scott Croxall. 1 and 2. Luca Delago holding down third. Here's where it's going to get interesting. Luca Delago find a line on the inside on over the Coleman. Oh, Luca Delago does a second place with a pass on the inside of Scott Croxall, but Cameron. Let's walk through this one again, Reed.
Yeah, that was an unreal heat. Obviously, Nas always has a way of picking it up, perfection, sucking up everything perfectly, taking the final spine. But now this is the exciting part. Luca coming on the inside, Tristan on the outside. It is a battle for second place, and I think it went to Delago.
Truer words couldn't be said, Reed. There you see Cameron Nas sweeping his hand. All right, here we go on course with our women's final. Great start again by Amanda Trunzo, Miriam Trepanier. Miriam Trepanier, a bit longer legs, but down through this long straight set of drops. Takia and the Boston drop into the BF Goodrich tire hard. Oh, Trunzo almost toe-picked and went down on that quarter drop over the two of them out in front. Trunzo's got this one. Davison comes across in third for a podium finish. That is fantastic.
As you can see, this sport clearly has no room for fear, and the men and the women just go full speed down a fully iced track. As a person who does not ice skate and has never played hockey, this looks absolutely terrifying to me. Let me know down in the comments what you think of it. Definitely like and subscribe if you got any value out of this video, and have a great day.